Good morning, everyone. Welcome back to this series of Getting Ahead. It's a pleasure to have all of you here today with us from diverse corners of Africa, joining us for this insightful journey into the realm of international audit practices. Your active participation is crucial in making this learning experience truly valuable. I encourage you to engage with the material, ask questions, and share your insights and experiences with our experts from Caseware Africa, who are currently online to answer your questions. As we embark on this journey together, remember that your growth and development are at the forefront of our objectives at Caseware Africa. Our team is committed to supporting you every step of the way, providing you with the resources and guidance needed to succeed. Thank you again for choosing Caseware as your learning partner. Once again, welcome to everybody to Caseware Get Ahead course, Introduction to Audit International. Let's make the most of this opportunity to learn, grow, excel, and get ahead together. Our product manager, Mr. Christian Stein, will join us in a few moments to share his vision and excitement of having you all here with us for this series on our assurance products. For now, let me give you a quick overview of what we will achieve in this 3-hour session together. I'm so excited. I want to stay 4 hours with you. So for 3 hours, we are going to be together. I'll explain to you the basic concepts of an audit. Remember, it's for our new intake. So we're going to explain to you the importance of an audit. What is an audit? We're also going to dive into what is a source document. How does this how is it processed to the general ledger? How does it tie up to that trial balance that we start to intervene in? Then I'll share with you what's the Audit International methodology. What are the different best practices in using our audit template? Then we'll go through the materiality and some related audit terms, making sure that you're equipped going forward to answer your manager's questions, your supervisor's questions, and also for you to ask questions in respect of a decision taken for doing this or this work on Audit International. I'll also share with you some other important terms and what they mean in audit. We'll also look through the different assertions in Audit International. Please bear in mind, we're talking about your Audit International methodology. Your firm must have their own methodology. Please be curious and inquire with your firm, what's your methodology? We'll also go through the document requirements for a compliant audit, and then we'll go through the audit program conclusion. So just a quick recap for all of you here. Today, it's really to learn about the template, what the template is, and some basic terminology in audit. All right, so let's start. Let me quickly check out whether our product manager will be joining us just now. Quickly checking out. So our product manager will be joining us just now. Please give us a few seconds for him to do a little introduction. For those of you joining us just now, welcome and good morning to all of you. Whilst we wait for our product manager, just a quick recap for those of you who weren't with us the 2 sessions before. Kindly ensure that you stay on mute. When you join, you're already muted. If you have any question or you want to have a comment, you have anything, please do use the chat function. We've got our teams at Caseware Africa ready to answer to your questions. In the event you lose signal, please exit and enter again the webinar or use the application rather than the browser. In today's series, we are focusing on the assurance component of our ecosystem. More precisely, we're going to go into Audit International, which is your tool that you'll use to perform your audit on Caseware working paper. I'm quickly checking out again if we have our product manager joining before we start with the introduction of what is the audit, how we perform the audit. I can see some more delegates joining, so welcome to all of you. We're about to start in a few moments. We're just waiting for the product manager for a quick introduction. I can see more delegates joining in. Welcome, everybody. We will kickstart in a few moments. We just want our product manager to introduce himself and his excitement about this series. Mr. Tate?
Good morning, Sandrine.
Hello, can you hear us?
I can hear you. Can you hear me? Good morning, Sandrine. Can you hear me?
Good morning, everybody. Just a quick word. We are busy welcoming our product manager online. Please do bear with us. That's the glitch of technology. We will progress with the session in just a few more minutes. Thank you. All right, that's the glitch of technology. Mr. Stein's gonna intervene next week. For now, let's progress with the different sections of the series. So once again, everybody, welcome to Audit International series. Now, the first topic that we want to discuss is about audit. What is an audit? So the purpose of an audit is to enhance the degree of confidence of the intended users in the financial statements. This is achieved by the expression of an opinion by the auditor on whether the financial statements are prepared in all material respects in accordance with an applicable financial reporting framework. In the case of most general purpose frameworks, that opinion is on whether the financial statements are presented fairly in all material respects or give a true and fair view in accordance with the framework. So an audit conducted in accordance with ISA and relevant ethical requirements enables the auditor to form that opinion. Now, to support the audit opinion, we are going to gather audit evidence to support this, the opinion on the financial reporting. As the basis for the auditor's opinion, ISA require us as auditors to obtain reasonable assurance whether the financial statements as a whole are free from material misstatements, whether it is due to fraud or error. Reasonable assurance is a high level of assurance. It is obtained when the auditor has obtained sufficient appropriate audit evidence to reduce audit risk. That is the risk that the auditor expresses as inappropriate when the financial statements are materially misstated. Now, where do the financial statements come from? So remember, the end product, and we've seen that in the first series, the end product of the client is the financial statements. So if you look at the bottom right of my screen, that's the ultimate document onto which we're going to provide our opinion. Now, where do that come from? It comes from the trial balance. That's the summary of the general ledger. So remember the TV that we have seen yesterday and the day before for those who were with us. It's a summary. Let's say we've seen the cash and cash equivalent. There was one line of cash and cash, or two lines for cash and cash, then bank overdraft. Then these line item, that amount is pulling from the general ledger. That will be the details of the transactions. Then from where does those GL pull from? These will be from subject ledgers, from journals that have been processed in the accounting system of the client. And this processing is coming from the source document. Remember, we had an action has been taken, like for example, to purchase a product We got the source document, or the client got the source document, they process it into the accounting system, which then pulls to the general ledger, which then summarize into the TB or other. You can also have other source for your figures, and this will then generate the financial statement. Now, the figures could also come not only from TB as mentioned, but from other sources. And this could be a loan agreement for the disclosure of your loan terms. So guys, remember, so when you are looking at the trial balance, you have to consider these other items. Any assets provided as security to the bank or to creditors. What about the related party lists not found on the trial balance? Sorry. But then by obtaining this, you can get valuable information. Your lease agreements to disclose commitments. These also can pull and will pull to the financial statements, and the details of that will not necessarily be found in the TB, but then in the agreements will then, which then go to your financial statements. Now, we thought that it is crucial that we understand what is the source document. That source document to which you're going to check or to perform your procedures to check that the accounts are free from material misstatements. An example on the screen is the supplier invoice. So that's the tax invoice where you've got the date, the invoice number. Let me activate my laser pointer. The date when the transaction was done, was it in the current period, last year? Is it relevant for the current financial period? Is that invoice number for that invoice cross-checking to what was processed onto the accounting system? The supplier name. What about that supplier name? Is it a related party? Is it a subsidiary, a company within the business? Who's that creditor or that supplier? Invoice to, is it invoice to our client, Wrap-Up Manufacturing Limited? What about the quantity, the description, the prices, the total amount, pulling ultimately to the processing that was done by the client? Now, I've explained to you that source document, and this is what they will take, that client will take to input into their accounting system. And before we move to the accounting system, also please bear in mind your other source documents examples, like the lease agreements, your amortization schedule, your bank statement. So there are other examples of source documents as well. Now, with that source document, the client will take the source document, go into the accounting system and start processing. So the processing will be in terms of selecting the supplier, selecting the reference, that appear on the invoice, the dates, the invoice number, the different description, and this 109 to 50 rand, this is what we're comparing to the tax invoice. Now, your clients, this is what your client will see, and they do, or sometimes not, they do actually process the transaction on a daily basis, but then in the general ledger, what will happen, this is what they're going to see, the transactions processed into the GL. So in that example of 109,250, that's the creditor balance going to our statement of financial position. Remember, we've seen that yesterday, our balance sheet. Then debiting P&L or SPLOSI, statement of profit or loss and comprehensive income, also known as income statement or P&L. That's the expense amount, and the VAT control 14,250 debit the balance sheet. So it's important for us to understand how the transaction is being processed automatically into the GL. The client goes into the accounting system, processes the transaction, it goes to the GL, and that's what they will give you as the details of their trial balance. So that's how they are going to say, if you have a look at my pointer, that's the consultancy fees portion of my GL. I've got only 3 lines here, but of course you'll know that it can be 1,000 or 100 lines in the GL. These are the details of the processing done on a daily basis that feed in the GL that will then summarize to the trial balance. Now that we have the knowledge of what is an audit, how do we get to the financial statement? How did the client get to that financial statement, the TB, the GL, the supporting documents? We can now move to the methodology. How does Audit International, the international auditing standards, help us in the way to perform an audit? Before we move to the methodology, I'm so happy to welcome our product manager who is now with us. I'm going to share my screen with Christian for his introduction. Over to you, Christian.
Thank you so much, Andreen. And sorry, guys, for being a little bit late this morning. Good morning to our fantastic new additions to the team, and a warm welcome to Chris Stein, the product manager for Audit International. Today marks a very exciting chapter as we gather here to get ahead the training series on Audit International. I know you had financials and working papers already, but today we're looking at Audit International that was meticulously crafted for you, our talented auditors. And I'm really thrilled to see the interest in the course, and I can assure you that your journey with Caseware and Audit is about to be nothing short of remarkable. As a product manager, it is an incredible initiative for me, and it brings me immense joy to witness the evolution and growth of you, our new Caseware users. The Get Ahead series is not just a series, but it is a full training program. It's a dynamic platform designed to empower you, our future leaders in the audit field. Your contributions are vital to our collective success, and we are committed to providing you with the tools and knowledge necessary to excel. Caseware and Audit International have been carefully selected by your firms to serve as the backbone for this training session. These tools are not just industry standards, they represent innovation, efficiency, and precision. As a junior auditor, you're about to embark on a journey that will sharpen your skills in audit, expand your horizons, and undoubtedly elevate your careers to new heights. Throughout the series, you will delve into intricacies into audit, exploring the nuances of Caseware as well. The training modules have been meticulously crafted not only to equip you with the technical proficiency, but also to foster a mindset of continuous improvement. We believe that learning is a lifelong journey, and your time in the Get Ahead series will set the stage for a lifelong learning in audit. I encourage you to embrace this opportunity with an open mind, as that is a natural part of the learning process. The Get Ahead series is designed to be a safe space for experimentation and growth. It's not just a training series, it's a community of learners, and each one are crucial. Please don't be afraid to step out of your comfort zone, push your boundaries, because that's where the real progress happens. In closing, I want to express my genuine excitement for what lies ahead. You're not just here to complete a training program, you're here to shape the future of audit and contribute to the success of your organization. Your journey in the Get Ahead series is a testament of your dedication, and I have the full confidence that you will emerge from this as a skilled and confident Once again, welcome to the Get Ahead training series. You saw what we're going to cover as part of today's introduction, and there's a few other series coming up. And let's embark on this journey together and make the most of every opportunity to learn, grow, and get ahead. So with that, I will now leave you back into the capable hands of Sandrine, who's going to take you through the rest of the series, as well as some of the other sessions coming up. So please remember to join us then as well, and I hope you enjoy the rest of today. Thank you, Sandrine.
Thank you so much, Christian, for this exciting introduction. All right. So I'm quickly checking that you can see my screen. That is 100%. So I hope that you're excited as I am following Christian's intervention. I really look forward to this series with you. Now, let's continue with the Audit International or the Audit International methodology. So the international auditing standards, the ISO, as we call it, are principle-based. So your firm will then decide how to implement the standards. And that's why we call the way they implement the standards will be the audit methodology of your firm. So now if you're wondering what is the audit methodology of your firm, if there is a formal framework, please feel free to ask your supervisors and your managers. Now, Audit International is an application, it's a software, but then it incorporates an audit methodology. And now, what's this audit methodology? So Caseware International licenses some of the content of the Audit International template in agreement with the CPA Canada. The content provides with non-authoritative guidance on applying your international standards of auditing. The approach to Audit International is a risk-based approach, whereby the higher the risk, the more the procedures that needs to be performed to reduce that risk to an acceptably low level. The scoring of the risk of material misstatement, you'll hear me referring to RMM going forward. The scoring then guides us for when we are going to perform audit work. So in Audit International, a risk is raised, and on FSA, this is actually a critical document in your audit tool. I'll introduce it to you just now. So what you need to remember, the FSA should then have the scoring of the RMM, whether it is significant, high, medium, low, or insignificant. And if the RMM is more than insignificant, then we will perform the audit work. So that's the Audit International methodology. Now, some other auditing terms you'll hear as we proceed. If it is your first time in an audit firm, you will be hearing going forward relevant assertions. A relevant assertion is defined as an assertion is all about the clause of transaction, an account balance, or disclosure, which is relevant when it has identified risk of material misstatement. This is determined before considering controls. Another term that you will hear going forward is the SCOTB, the significant clause of transactions, account balance, or disclosure. A clause of transaction, account balance, or disclosure for which there is one or more relevant assertion. So these two work together hand in hand. You'll get a Scotty, you'll get a relevant assertion, one or more relevant assertion for the class of transaction. Then you'll just need to know how to incorporate that into your audit flow. So that's where we come to, when are we doing the audit work? Now that you know the concepts, where do we get the TB? Why do we need the TB? What is the different concepts in Audit International? How does it work? What is assertion? What is Scotty? Now you need to know, when are we doing audit work? And also why? So what is the auditing flow? So it is when you guys will now start the work. So just to give you a bit of perspective, previously, before the introduction of ISA 315, the methodology said that the main audit work should be done for every item that is material. All assertion had to be tested. Now, the rule is, when you record a risk, the assertion for the risk raised have to get tested, and if the section is material. But if there is no risk, then you have to select at least one assertion to test if the account is material. Now, if we go granular in the methodology, let's start with the left-hand side of my screen. The left-hand side here represents the scenario where there is a risk. The risk of material misstatements is greater than its significance. And that's the easiest way to understand. The easiest scenario to understand the methodology. A risk has been raised on the FSA, the document that I will introduce just now. The RMM is more than its significance. Then your manager has to select the assertion when the assertion relevant to the risk. If we go in a few moments to the FSA document, you will see, and also I've seen a question just now about the no documentation provided to you, but we've provided the link to the documentation. You can refer to that and open the case study that I've shared with you. We will then see, for the cash and cash equivalent example, there will be a risk raised for this assertion, and it has been the RMM calculated is greater than its significant. Then we'll need to consider the system description. We need to consider going through our document. I think it's understanding the entity, the document 510. What I mean here is you need to go and deep dive further and understand, okay, we've got a risk for that assertion. Let's go and dive further. Let's go and discuss with the team, with the finance team or the team dealing with cash and cash equivalent, with the finance manager. You need to go and describe the system, the cash and cash equivalent component. So you have a Scotty, you have a relevant assertion, you have a risk. Therefore, you need to perform the audit work. You need to address the risk raised and then perform through the performance of audit work. When we will shift to the FSA in a few moments, you'll see all these different steps. But I'll give you a high-level overview, and I promise you we'll come again to that slide to make sure that you understand. The next scenario, or on the other side here on my slide, is a scenario where you have a material section and all the risks are insignificant. And that's the most important part. So there has been no risk linked to a section. It can be it is a material section, a material financial statement area, a material account. No risk raised, no risk linked to it. But your manager should at least select a response to a particular assertion, to test a particular assertion where we need to audit if ever something went wrong. That's where professional judgment comes in deciding which assertion to choose if there is a slightest risk which the assertion, if we think we would have to address a risk. So by selecting the assertion, then the procedures will be inserted on your audit work program. So guys, I'm sharing this information with you so that as a first year, you can question your manager and say, hey, Mr. Manager, I see a material financial statement area. There is no risk raised on that section. I don't see any procedures in my work program. What should we do? The manager will then go back to the FSA and select a response or a set of procedures to perform to test a particular assertion, at least one assertion, which he or she thinks there's a slightest risk that this assertion need to be addressed for material misstatement. We will go into Audit International now, where we'll go through this step of the audit work. Again, we are showing you that, guys, because we want you to understand the principles. We want you to understand how the audit work program works. Where do you get the audit procedures as well? This is from this process. So I'm going to unshare my screen, my slide. And if you go to Caseware working paper, go file open, computer, you can browse to the location where you have saved the file that has been shared with you. The file is currently in a zipped mode. You first, when you download it, you unzip it using Windows 2. Once it is unzipped, you can then go to browse on Caseware working paper and then select the wrap-up manufacturing limited. That's the audit file for today. I'm going to give you guys 5 minutes to do that. I just want your confirmation in the chat box that you were successful. I'll go through the questions if there are any, and please do shout out if you need any assistance. So 5 minutes from now, and we will go through the Audit International case study, Wrap-Up Manufacturing Limited. If you're successful, please do raise your hands on the go-to tool and do let us know that you have been able to open the file. I see one hand's raised. Thank you, Henry. Your file is now ready. We are going to proceed in 3 more minutes. I reiterate, if you were successful in opening your file, please raise your hand. Thank you, Carla. Thank you, Joseph. Thank you, Abiola. Thank you, Wondu. Thank you, Tino. Thank you, Godfrey. Thank you, everybody who's raising their hands. Thank you so much. Thank you, Abubakar. See quite a few of you still with no hands raised. We are going to give it 2 more minutes. If you are on a lower version than 2023, you will not be able to open the file. So we recommend you to log in on to the community, download the latest Caseware working paper, Audit International, IFRS template, IFRS for SME template, so that you can access the file. And we highly recommend you to do that every time there's an update, to update your software, to update your template, so sure that you have a compliant template installed on your machine. For now, if you cannot access the current file, please follow through the training. We're going to go very slowly, step by step. I'll give you the opportunity to write down the different steps so that you can catch up as soon as you get the latest version. All right, so if you have your Caseware Audit International Engagement Wrap-Up Manufacturing Limited open, you can now shift your attention to my screen. I will again go through the audit methodology and on the auditing flow rather, and then we're going to progress and we'll go through the file and I'll give you time to go and explore the different components of the file. Now, what we've been talking through is when do we perform audit work? And we started talking about whether the risk on the FSA document is greater than it's significant. So on my Audit International document or engagement file, I'm going to go directly to the FSA document, but please rest assured, I will give you a very nice description of what's FSA. Actually, maybe I should do it now. The FSA, Financial Statement Area document, which is found under, you can also find it on the digital dashboard, the FSA, Financial Statement Area. This is the nervous system of your engagement file. This is what all of us as a first year we will be using every day. This is a document that will be open most of the time. The first scenario that we want to dive into is a material FSA. So when you look at the FSA document, financial statement area, if you should follow my cursor, I'm currently on cash and cash equivalents. That's the amount, 4.9 million, and it is assessed as being material. Guys, your supervisors and your managers would have already done that work for you. That is selecting the material financial statement area. You will start to intervene onto that FSA worksheet. You will see your material FSA. So there will be the little tick. The risk raise will be in that column, risk reference. That will be the risk raise for your different assertions for that particular FSA. Now, the computation of the RMM would be, if there is a risk for a particular assertion, it will be greater than its significant in this case, has been selected for existence. We're going to go into the definition of the relevant assertions in a few moments. And based on this computation, because there is a risk rate greater than and a risk greater than its significant for the different assertion, what you will be expected to do is to go through the system description, the score B. So that is found, it is the document 510, understanding the entity. So you're going to describe the system. I'm quickly going to open it to give you more insight. It will open in a few moments. Whilst it is opening, I might share with you here where we are in that scenario. So we are currently in a material FSA. We've seen the relevant assertion risk raised for the different assertions where RMM is greater than insignificant. We're now going through the system description. And this will be done in the document 510 in Audit International, which is understanding the entity. It's still busy executing script on my side, so let's give it a few moments. You will not be really expected to select the RMM, select the procedures. This is something that will be already done. But what's important, the message here, you need to understand how did they get to the procedures that you're performing. That's what we're trying to achieve by explaining to you the different documents. So yes, Danielle, thank you for the question. We will cover in details in a few moments the material section. It's coming just now. I love your question. It's just on point. Please bear with me a few moments. I just want to give you a high-level overview. Then we go to the materiality in details. Here, what we're saying, this FSA, 4.9 million has been selected as material by my manager. Risk has been raised for different assertions. The overall risk of material misstatement is greater than insignificant, the expectation is that we must perform procedures to address risk of material misstatement. For an assertion that doesn't have a risk raised or documented for it, RMM is insignificant, then no procedures have been selected, and that is 100% correct. Now remember, there's got to be, that's where you will come into the document 510, identifying risk through understanding the entity, where you are going to document the description of the system. This is where you're going to talk to the personnel of your client, inquire, give more details so that you can address, you can select the right procedures to address the risk raised. Now, going back to the FSA, we go back to the FSA, based on the procedures selected here, the audit work done is now pulled to the work program. If you should follow my cursor, far left of the screen, that's the work program. And here it's 420.10 cash in cash equivalent audit procedures. This is what you guys will be using to perform your audit procedures. And procedures have been added because of the assessed risks at the assertion level and the scoring of the risk on your FSA. Higher than insignificant for existence, accuracy, evaluation, presentation. Hence, procedures must be done to address risk of material misstatement for those assertions. No procedure done for completeness because risk is insignificant. The next scenario now, I'm just going into the scenario explaining that slide. The next scenario, if you have a look at the right-hand side of the screen, you've got a material section on your FSA, just like the cash equivalent. You've got insignificant RMM. You should at least provide a response time. So let me go on the FSA. Let's not take the cash in cash equivalent. Actually, that's not the correct one. Let's go and have a look at the trade and other receivables. This FSA, this account, trade and other receivable of 24 million has been assessed as material. There's the tick here. However, there is no risk selected for this FSA. Hence, the computation of the risk has been selected as all insignificant, right? What the recommendation is, based on your ISA 315, is that you must at least select a procedure to address risk for a particular assertion. And again, this is based on your professional judgment. We're going to judge there could be, in the event there could be a risk, which assertion should be tested. Then your manager is going to select it, select the test to be included, and then on your work program. So if I go to the work program now, what you should see is a list of procedures to address accuracy and valuation assertion. In the event now, where do I want to go? In the event you open an audit program for a material FSA, and you can't see any procedures in there, you need to ask your manager, hey, Mr. Manager, that accounts, that FSA is material. You have selected or you have not yet selected a procedure. Please help us to understand which procedure we need to insert. They will go on the FSA, they will tick the procedure to perform for a relevant assertion. Once they do that, the manager will come to the work program and then select that little red cross here. It's going to select the procedures relevant for accuracy and valuation. So this, again, is based on your professional judgment. The manager will then select one or two procedures to adjust risk at AV assertion, accuracy evaluation. They will go and then perform their different selection and press on OK to include onto your work program. I see some questions pooling. Yes, thank you so much, guys. And really, this is the purpose of this session. We're really excited with your questions. So we'll go again onto the materiality section. Danielle, that's what I've already answered that question. Then there's another question from Godfrey. What is the depth of procedures? Let us say if assertion is low, is this automatically guided by Caseware? No, Godfrey. This is your professional judgment. You need to know the depth into which you're going to go for your procedure. If you say a risk is low for a particular assertion, there's still some risk, right? It's not insignificant. There's a risk, so you need to perform some procedures. And this is based on your knowledge of your client, your SCORDB, the depth that you're going to understanding your entity, then you insert your procedure. Another question from Waloya, in case you select insignificant on my assertion, will procedure delete automatically? So yes, it's not going to delete. Okay, that's a very good question, Wayola. The principle is, if you look at trade and other receivable, it's a material section. You agree with me? Okay. There's no risk raised for this section. Yes. The risk, the overall risk of material misstatement is all selected as insignificant, meaning that no procedures have been added yet to your work program. Recommended best practice is, of course, I'm going to repeat myself, is to include at least one set of procedures to address risk for a particular assertion. So there's no automatic deletion, if I can put it like this. However, it was the other way around. That is, you use your professional judgment to then start adding procedures for material FSA. You start with a blank slate. It's blank initially. Then you start choosing which one you want to perform. Another question for Godfrey, is there room for judgment as well? Yes, 100%. It's all about your professional judgment, your knowledge of your client, your risk appetite. So yes, there's room for that. Oh, wow. Godfrey, you're excited. Yes, I am as well, 100%. Thank you, thank you. There's another question from Temi. I'm going to take a few minutes to answer your different questions, and then we'll move to materiality explanation. In the FSA worksheet, are the risk assessment based on judgment, or there is a guide to risk assessment? Now, again, the risk here on your FSA are pulling from your risk card. So we're coming to the risk dialogue in the sessions to come. How do you document risk, etc.? And this then pulls, there's some automation, eh? It then pulls your inherent risk, control risk, then we do have some guidance in terms of RMM. But then, again, there is judgment, professional judgment. We have not we, but the technology can say, okay, it is significant or it's low here based on your risk that you have documented. But you can decide, okay, no, for whatever reason, whatever information that you have, that you've read through on the newspaper, seen on the website of the client, you're going to say, no, it's going to be medium. That's your judgment. Wow, I'm so excited with your questions. Okay, so let's continue. I hope that I've got some clarity in terms of when do we do audit work based on ISA 315, based on your professional judgment, and based on what we recommend to you as well. Okay, now Audit international method. Now we're going back to, now that you know how it works, I just want to give you perspective how your client file, your engagement file was created. I've already created for you, so that will be usually the case. Your supervisor will already create a file for you, give you the file, you'll then start with the audit procedures. Now, in Audit International, we've got what we call the engagement profile selector when we create a document or an engagement file. The engagement profile means that at start, when you create a file on Caseware working paper on Audit International, your manager will already decide whether it is a small non-complex, a more complex, a larger engagement. Why will they decide on this category? It is so that the technology inserts only documents relevant for the type of profile. If you have a look at my screen, the selection says One Form Plus. The One Form Plus is like a memo form document that will be inserted. The assumption is it's a small, complex or non-complex engagement where you are going to do a thinking type of audit. You know, you don't need the automated tick up the box audit. Like we're going to say, okay, have you done this? Yes or no, not applicable, other. Did you insert or get the different whatever documentation? Yes, no, we got it, blah, blah. In One Form, we're assuming in small engagement, we know what we're doing. We're going to write our own procedures. Here we go. We're going to use One Form Plus. The code, on the other hand, and one thing I did not mention, the One Form, when selected, will only include documents relevant for that type of small engagement. It will not include documents relevant for example, large audit of complex consolidation or whatnot. What I'm trying to say, when you receive an audit engagement file, when your manager has selected the profile, it's only documents relevant for the profile. The core profile and the tailor per engagement, these are tick off the box audits compliant with your ISA. And again, only features, only documents relevant for, let's say if it is a tailor per engagement for larger complex audit will be included. Okay, so you can trust the software with the documents that have been inserted on the engagement file. And that's the first step that your manager will do. The next step that they will do is to link that audit file to an IFRS or IFRS for SME template. That integration part is extremely important. The benefit of integration is you will get your financial statements. We've seen that in yesterday and the day before. You will get your lead sheets, which is extremely powerful. It's, you know, the details of all the items that you've mapped. You will also get your mapping database, which will then drives your FSA, which also drives your materiality, which drives your work program as well. Without this crucial part, without the FS integration, there will be several functionalities that will not be available, like the mapping, the lead sheet, the info store, the financial statements. So recommended best practice is to integrate. I'm telling you guys because usually, and that's the yesterday itself, after the training, that was a common support case that I have from junior clients. Hey, Sandrine, I can't see my info store. I can't open the financial statements, or I can't do the mapping. This is because there was a step missing, which was financial statement integration. If this is the case, please do connect with your supervisor and manager. Say, hey, Mr. Supervisor or Manager, please reintegrate the file. Make sure that we link it to the IFRS template or IFRS for SME or IFSAS template, whatever it is, so that we can get the groupings, the mapping, and we can nicely generate, you know, our lead sheet, mapping structure, financial statement, materiality, FSA, and everything. Now, to reiterate one last time, but again and again, I'll talk about this again during this session. The Audit International methodology is a risk-based approach. In the document 405, so if you're writing that down, please do so. In the document 405, the engagement acceptance of continuance procedure, this is where you're going to document engagement risks and considerations for accepting or continuing an audit engagement. This is done by your manager and your partner. And in this document, if you're curious, you should go into that document. This is the document that will assess the level of engagement risk, whether it is acceptable for the firm to continue with the procedure. In that document, your firm, your manager will assess whether you guys have the necessary competencies, whether the firm and staff comply with independence requirements, and whether all the engagement preconditions have been met. Then the manager and partner, once they've got that holistic view, they will then conclude on the engagement risk scoring. That is, it will give you an idea whether this engagement is a low risk engagement, a moderate risk engagement, a high risk or not accepted. This will really guide you to understand the scope, direction of audit work to be performed or to address the risk. I've seen here a question again asking about room for judgment. What about how do we know how many procedures to insert, etc.? Everything starts from the acceptance, the document 405. In conclusion, you should have an idea of your engagement risk scoring. Should you perform more procedures to address higher risks, moderate risk or low risk, or simply it's not accepted, so you're not going to go ahead? So there's a question from Abu Bakar. Thank you. Hello, Abu Bakar. It's a Mauritian just like me. So I've got a Mauritian online, so that's very nice. So which of the question is, which of the two, Audit International or IFRS 2023, should be created first? So Abu Bakar, when you create a file, usually you see, if it's an audit engagement, you select Audit International template first because it's an audit engagement. Then you go with the profile selection, the integration with IFRS templates, and you can start. We're not doing that part in this session because we are, focusing on the work to be done by our different junior. Okay. Now, let me quickly check what the time is, because, when I'm excited, I'll just continue talking. We've got a bit more than, less than 15 minutes to go. Then we'll go for a break. But for now, let's move to the Audit International workflow. I would like to explain to you what you've seen when you've opened your Audit International document. Now, you create a file on Audit International, or if you're a user, a junior, when you open your engagement file, that's the screen that you'll see. We call this the digital dashboard. The digital dashboard is a very useful dashboard that helps you as a new user to navigate Audit International. It's I like to see it like on your phone. You've got different small options, right? It's just like this. On the digital dashboard, each of the different widgets, the different rectangles that you see in blue, you can then click on those items and see the list of documents relevant to a particular section. If we focus on the planning part, and that planning part will be done by your managers and partners. If you are a new intake, remember that session is for new intake, for the new people in the firm. You might not really be involved in here, but it's important for you to understand where everything is coming from. The audit planning workflow, if you should follow my pointer, starts with your client acceptance procedures. We've just seen where your manager will then go through and assess the level of engagement risk, whether it's acceptable for the firm. You also have the understanding the information requested to the client. The timing and firm deliverables is also something that you should go in and see. What did we promise the client? What's our time budget? We said we're starting on X date. We said that we need on X date the documents from the client. We said that we're going to deliver on X date, whatever we need to deliver to the client. So it's important for you to go and look through all of these. The materiality section is also something else that you need to go and look through. You might not work on it at the moment because you're still on a junior part, but it's important for you to go and check it out. Now let's start with the engagement acceptance procedures. Like mentioned before, the objective of this document 405 is to assess the level of engagement risk, whether it is acceptable for the firm, whether you've got necessary competencies. Do we need an expert? What are the firm staff, the firm and the staff independence requirements, and whether the preconditions have been met. And the understanding gain of the client from the procedures will then help you, the audit team, to assess the risk. And that's the conclusion part, whereby your managers and your partner will then select the risk. So going forward, if you're a new intake, that document 405 is something that you're going to go through when you open your Audit International engagement file and assess. If you scroll down to the conclusion part and look through any comments in respect of the risk assessment for this particular client. Before we go to the break, one more item that I'd like to discuss is the first part of the digital dashboard, which is the engagement setup. So every single step is those blue rectangles. So when you click on a rectangle, you access a step. So it's a top to bottom approach. So your team, or if you're a new intake, you're going to always to start on the top, then on the next, and you start completing all the items onto your digital dashboard. Same for the workflow. The workflow, as I've shown you before, will list all the audit tasks. The setup is the setting up of the engagement. Usually that will have already been done for you. You'll be handing over when you come to the workflow. If you feel that you're more at ease with Document Manager, because that is what we've seen yesterday and the day before, you can still go to the document shortcut tile here, and this will open your Document Manager. It's the same thing as the digital dashboard, but again, it's just a mixture of folders and subfolders, and then you simply go and open your different folders and documents. You'll have a combination of case view, Caseware, working paper, Excel, Word, PDF. All of that will be found on Document Manager. I think we went into the details of it in Document Manager. So yes, you can then apply what you've learned. I've already activated for you some columns on the document manager. You've got your planning by, reviewed by, performed by, deliverable days and issues. Please do apply your knowledge of what you've acquired since Wednesday to reorder columns if ever you want to activate. We've got 5 minutes before the break. I will now go through the questions and make sure that we go through the different questions being asked. I'll start with one of the first question, which is if I have closed my digital dashboard, how to reopen it, just like the Document Manager. Okay, that's a very interesting question. So let me go to Caseware working paper. It's a very practical one. Thank you for asking that, Daniel. If ever you close your digital dashboard, so I'm going to close it as well, and you only see your Document Manager, to reopen it, you can go to Tools, Options on your Caseware working paper ribbon. The last tab is Tools, Options. Then to the left of your screen on the Properties window, there's Layout. It should say Audit International Workflow 6.0. Press on OK to accept. Click on Yes. Layout Audit International, then press on OK. Press on Yes. You should get back your digital dashboard. Give it a few moments to pull. And if you want to reopen Document Manager, it's the Documents shortcut. Please remember, Daniel, to select the tab relevant for your work. So if wherever you want to see the engagement setup or the workflow. There's another question. How can we edit engagement file name on InfoStore if there is a typographic error? So thank you, Ademola, for your question. This will usually be done under engagement properties. Under engagement properties, operating name, that's where the name of your client is pooling to InfoStore, is pooling to any automatic and case view document on Caseware. Remember, engagement tab, engagement properties. I hope that helps you. I'm going to move to the next question. Do bear with me. I'm quickly looking through the questions. So there's another question. Are we correct to think both IFRS and IPSAS are inspired by the ISA? So your ISA will be for International Standards of Auditing. This is for your Audit International. Your IFRS or IPSAS are for your reporting purposes. These are regulated by the different IFRS standards and IPSAS standards. So these two will be different, but the ISA will then dictate to you how you should perform your different work to be compliant. Combined with the IPSAS and IFRS, the technology allow you to generate the figures, to generate the materiality, the FSA. Now, a beautiful way to understand these two, I like your question, Godfrey. Is the document 420 dots? That's the materiality document. And the materiality document show you how the figures from IFRS templates, mapping and etc. meets your ISA, meets your methodology. So when the two meets together, that gives the baby materiality document, which will then generate your FSA, the nervous system, and all of that. So if you're a bit confused, we're going to go into the document 420. This is going to give you more perspective of the combination of the IFRS and your methodology and eyes and everything. So there is another question. Again, thank you, Godfrey. So can we still practically tailor special assignment on Caseware to achieve a unified and coherent methodology? 100%, Godfrey. Your Audit International template is modifiable. We can help you through our expertise to modify the template to incorporate your own methodology. Please do connect with us. We're going to keep your email and your details. Our Audit International consultants will connect with you and help you tailor your Audit International template. So there's one last question I will take. So what do you do when you have an error message saying engagement file not found on the digital dashboard page? So for that, Sharifat, please do bear with us. I'm going to ask our support team member to connect with you. That could be probably a script issue that can be fixed. All right, thank you, Godfrey, for that comment. Guys, it's nearly 1/2 the hour. Let's take a 10-minute break from now. See you in 10 minutes sharp. There's more to come. Looking forward to sharing more with you. So meet with you at 22 the hour, 20 minutes to the hour. Welcome back, everybody, from the coffee break. If you have some colleagues and friends still grabbing a cup of coffee, please do let them know. We're about to start in 30 seconds. Okay, so now let's dive into one of the most important documents in Audit International, which is the 420 document, the Materiality document. It is the document where I like to define it where our methodology meets the figures in the technology. So something is material, is considered as material if it will influence the economic decisions of your users. We thought that in this new intake session, it will be important for us to help you understand the different types of materiality and the reason why it has been calculated. So usually the calculation of materiality will be done at planning stage by a senior or by a level, how do you say that, a manager level. For the overall materiality, we define it as an amount that will, below which will not impact the decisions of your user. So based on your auditor's professional judgment, this amount would be the highest amount of misstatement that would be included in the financial statements, again, without affecting the economic decisions taken by a financial statement user. Usually, if you want to interpret it further, the overall materiality flows through to that FSA that we've seen earlier, the cash and cash equivalent. How was it selected as material? So the overall materiality then flows to the FSA, which is then used to flag the material financial statement area. The second type of materiality is the performance materiality. This one is set at a lower amount than your overall materiality. It provides a margin, or if you want a buffer, so that these small individual immaterial misstatements will not then accumulate an amount which would be materially misstated in the financial statements. So the different percentage applied will then depend on your desired audit risk. Once again, I reiterate, 420 document is where the figures of the client meets your methodology. So depending on your audit methodology, the calculation of performance materiality will then be computed as a percentage of overall materiality. Your adjusted performance usually is applied to a specific section only, and in some cases, there may be a need to provide a larger buffer to identify misstatements or events that are much smaller than what would have been identified under performance materiality. In other words, the adjusted performance is going to be, the value is going to be lower, even lower than your performance materiality. Clearly trivial, the trivial materiality. So there may be a need to provide an amount below which misstatements would be clearly trivial. So whether taken individually or in aggregate, those amounts will clearly not have a material effect on your financial statements. So you guys must be, if you're a new intake, you must know and go through your 420 document and understand those different materiality definitions. Some more audit terms. We've got the schedule of overs and unders. So this schedule relates to the working paper which is used to accumulate all the over or under misstatements that you came across during the audit in order for you to assess those individual overs and unders and the overall impact on your audit opinion. We will go through the document either in this session today or later, where we show you those unadjusted misstatements or differences, the impact that it has on your audit opinion. You will also hear every now and then factual misstatement. The factual misstatement is a misstatement about which there is no doubt. You've seen the invoice processed in the GL for an amount of 100 Rand, but the actual invoice, that supporting document, that source document from the supplier shows you 150 Rand. Hence, there's a factual 50 Rand misstatement. So you've got no doubt it's mathematical, that's the factual misstatement. The judgmental misstatement, there's differences in our judgment and management's judgment. So what you judge as misstatement and what I judge as a misstatement, here is going to be different. For example, the management of the client has raised a provision for bad debts of 1,000 Rand, but we perform our testing for accounts receivable, and we believe that it should be 1,700 Rand. Hence, there's a 700 Rand judgmental misstatement. Now, the lowest type of misstatement is the projected misstatement. This is our best estimate of misstatements in the whole population. We project the identified misstatements from a sample tested to the population as a whole. Now, we use that, all those different misstatements, we will process all of that with the different categories on Audit International using Caseware working paper tools. We've seen your journal entries options on Wednesday. You can then choose the type of misstatement. These are going then to pull in your journals of overs and unders, and then it helps you decide on the impact on your audit opinion. It also will help your team to decide on the way forward for an engagement. Now, what happens when a misstatement is identified? Let's take an example that our overall materiality is 1 million Rand. So if you're noting down, please do so. Let's say our overall materiality is 1 million Rand. Our performance materiality is 800,000 Rand. And clearly, trivial has been set up at 30,000 Rand. Let's assume that we do a testing and identify a misstatement of 50,000 Rand. You would agree with me, based on all the conditions I've given to you, this 50,000 Rand is above trivial misstatement, because our trivial misstatement is at 30K. However, it is not above performance. So because it falls within the performance materiality, this error of 50,000 Rand will then go to, or will be taken to, the journals of overs and unders, unless the client decides and wishes to correct them. That error process it in the accounts. If this misstatement was over performance, in our case, it's 50,000, performance is 800,000 rand. If that error was above performance or specific materiality, then we would accumulate it on overs and unders. Just taking you time to take in what we've discussed. Now, what we need to remember as a new intake, always check with a more senior team member what to do with a misstatement. If it falls above trivial but below performance, what should I do with it? If the misstatement falls above specific materiality, where does it go? Do we accumulate it under overs and unders? The answer is yes. If the misstatement is above performance, what should we do? Accumulate it under overs in the journals of in the document of overs and unders. Now we come to the definition of the financial statement area. The second most important document. It's the second, but actually is the first. It's the nervous system of your engagement file. And you guys are lucky. You'll always be within the nervous system. The financial statement area is a worksheet which is the central component of your audit template. It will bring all the informations received from across your engagement file. For instance, you've done the mapping of the trial balance. This will pull to the FSA. You have set up materiality. The materiality assessment will be automatically, not automatically, but your manager is going to make sure that the technology selects the material FSA based on materiality calculation. All the risks documented across your engagement file will go to the FSA. You will then be able to compute your risk, whether it is significant, insignificant, or higher than insignificant. Then decide on the procedures to be performed, then go to your work program. So that you have to master that FSA. If you want my opinion, if you're new intake, this is the document that you will be focusing on. This relates everything. Please note that your FSA worksheet can be grouped by individual account and or audit area. If you scroll through your FSA, you'll see that it starts with your balance sheet line items, your non-current assets, your current assets. Then if you scroll through down, your equity, your liabilities, non-current, current liabilities, and your P&L items. So still stay into the flow of your financial statement. Now, please note that your managers or your supervisor will usually refresh the FSA before you open the FSA. If they have not, you will receive that bubble text that says FSA generated but no planning balance. Please do let them know. Remember to talk to your managers. The communication part is extremely crucial when you use technology, because you want to make sure that everything is coordinated, and communication with your team is crucial. If you see that text, then your manager should refresh it, and what will happen, there will be automatic selection for materiality. If you don't see that bubble text FSA generated but no planning balance, and if you scroll through your FSA, then everything's fine. What you should see usually, okay, is that your manager has nicely refreshed the FSA, there's no bubble ticks appearing on the top of your screen. You should also see that the manager has locked the planning balance column. That planning balance column means it's the balance as of a particular date that we have received the TB. We've like locked the balance. It's like it has taken like a picture of the TB at a point in time onto which we're ready to start our audit plan procedures. You should also see that your materiality column for those material FSA have been automatically selected. So you're not going to do that manually one by one, right? So this should be selected if your FSA is material. So now, guys, let me show you how does it happen. If you look at cash and cash equivalent example, the planning balance is currently 4,920,000. This is greater than our overall materiality of 2.2 million. So the technology based on figures only will select this FSA as being material. If you don't see the selection here, that would mean the FSA was not refreshed, hence the selection not done. You can also check out your materiality details here. If it's 0 throughout, it would mean the document 420 was not completed. Now, your manager will also ensure before they give you the FSA, they would have gone through the optimization of the engagement file through the FSA. This will be done by clicking on that little paper icon with a red tick on it. Why would they do that? It's just because for those line items not marked as material, either based on figure or based on, you know, the definition of the FSA, like related party, which is always material. If nothing is selected here, if it is blank, irrelevant, your manager is gonna then tell the software, hey, Audit International, help us remove any audit procedures not relevant for this line item. So the technology will do that through the optimizer. What the technology will do also, for those marked as material, like this property, plant, and equipment, it will keep the work program, and then you'll be expected, once again, based on the methodology, ISA 315 as well, you will then be expected to either select your procedures for the identify risk, or if you don't have any risk, RMM is insignificant, you will be expected to at least select one procedure to address risk for one assertion. Now, the scenario here would be, what if the manager has removed a line item, and then by definition or based on the information that you receive, you must reinsert the work program, the audit procedures. How do we do that? So I'm going to show you how you can easily reinsert a bunch of documents from your FSA, from your nervous system. So on my FSA, let's have a look at my screen. And if you want, I can give you some time to do that as well. If I scroll down, let's take the VAT receivable, FSA. Currently, there's no planning balance, there's no final, it's not assessed as material. And if I expand here, expand the FSA to open and see the list of relevant assertions, there is nothing. And if I scroll to the right of the screen, there is no working paper, there's no audit procedures attached to this FSA. Let's say we get information that the client did not process the VAT receivable correctly, or based on, understanding the entity, talking and looking at the VAT records or the tax records, we've got some information. What you need then to do and ask your manager to do is then select the materiality assessment. This will then create a red dot next to the checkbox, indicating that somebody, not the technology, but a human, has clicked on it. There will also be the red triangle indicating to us that there's no work, no audit work included for that materially selected FSA that we need to review, we need to maybe reinsert it. This will be done if you scroll to the right, then this will be done by clicking on that little paper icon with a plus. And what will happen? All the supporting documentation, including the work program, including the lead sheet, will be reinserted automatically. Click on the paper icon. It will prompt you, reinsert the reference document and its supporting documents into the document manager. The answer is yes. We want to have everything back. And that's the recommended best practice. Use that nervous system, use that document to drive your full engagement file. That's the link between your technology, the document manager, the different work programs, the different supporting documentation. Everything happens in the FSA. I'm now going to go through the different questions before we move to the next topic, which is a more lighter topic because we've already covered it. This is the lead sheet topic. So let me have a look at the different questions. I see, sorry, there's no question so far. So I'm going to take away that you guys now understand the principle of the FSA and how does it relate to your different sections in Audit International. We can therefore move to the next topic, which we already introduced on Wednesday, which is the lead sheet. So what's the lead sheet and the reason to have the lead sheet? So once you have the client's trial balance, it is imported into Caseware. It can be either yourself as an intern, or it could be your supervisor doing it. Then they will proceed with the mapping. Now, the mapping tells the software whether these accounts belong to a particular section within your financial statements. In our screenshots, we have the bank and cash accounts that have been mapped to cash and cash equivalent section, as this is where they are going to be disclosed in the financial statements. The lead sheet in Caseware working paper is a zoom in of that section of the trial balance mapped to that place on the financial statements. Look at how efficient your task is now. You have everything automatically grouped in a document where you can then start performing your other work. Okay. I'm going to go back just a bit because we've got a little question around materiality. So the question is, what are the bases for materiality selection? How do we determine the suitable materiality? That's a very interesting question. And the answer will be the computation, the calculation of your materiality is based on your firm's methodology. How do you compute? How do you get to that percentage that will get you to your overall materiality, to your performance materiality, to the adjusted performance and trivial misstatement? How do you get that percentage? This is from your firm's methodology. So if you're from part of a network, please do refer to your network's materiality documentation. I'm sure that they have documented everything. If you're part of a small practice, you can definitely connect with your managers, partners, and ask them, explain to us how do we calculate, what's the percentage, where do we get that to that percentage to compute overall performance, adjusted performance trivial. That's professional judgment. That's your methodology. We give you the figures. Now the base is your methodology. Thank you, Sharafuddin, for that very interesting question. There's another question on materiality. Is the materiality automatically inserted in the FSA once the TB is imported? The question is no, Simpiwe. The step, that's why we introduced materiality before FSA. You need to open your 420 document first, or ask your manager to go to 420 document first. Then calculate the materiality, the different materialities of the all performance specific using your first methodology. That is the percentage multiplied by the figures on the TB. Then you open the FSA, refresh the FSA, then the figures, the materiality assessment will be selected automatically. Of course, the managers will use their professional judgment to scroll through, assess which line item is material by definition, and if they want, they can select the line item as material. I hope that is clear for you, Simpiwe. Thank you for the question. So going back to the lead sheet, and this is a very extremely powerful tool in Audit International. The lead sheet is an automatic document, and if you would remember, the icon that you should be on the lookout is that little it's gray cartwheel with a paper icon. That's the automatic document. So here, the automatic document or the lead sheet on the top right of the screen has the document number. It also has the name of your client top left. Your materiality information will pull on the top of each lead sheet. Then you will get the details of all the account numbers mapped to the lead sheet. It gives you like an overview or more details of the section in a file. So each section on your FSA will have its automatic lead sheet and the different items that have been mapped. Now, referencing is the next topic. So what is referencing and what is important for referencing? Referencing is a way to lead someone through our audit work. And in Caseware working paper, we've got different options that allow you to perform your referencing. You can do a document referencing, a hyperlink reference, a manual reference, add a note, link an Excel, link a case view document, a Word, a PDF, just name it. So the lead sheets will, the referencing on our lead sheet will then help our manager to find where have we done our work. In this particular example, for current accounts line item, we've done all our work, our bank reconciliations on the document 421. We have linked that line on the lead sheet to the Excel so that my manager can click on the 421 link, review the work that has been done, and then sign off whether he's happy, confident with that. So I just want to point out that in Caseware, when you have a referencing in blue and underlined, it means that it's a hyperlink reference that you'll be able to see, to click on it, and it will open the Excel, in that case, the Excel directly. So now let's go to Caseware working paper. Let's open our trade and other payables in Caseware file, and let's view the automatic document. Going to escape it here. I see some more questions on materiality. I'm going to suggest that let's complete the referencing part, the tick marks and the different notes that we have on as exercise, and then we can come back to the materiality. I still have some items to cover in terms of assertions and how do we perform our different documentation requirements and audit conclusion. I'll definitely come back to that materiality discussion, right? So I'm keeping your question, Yusuf, I've seen your question. I'll come to it just now. So let's go to the referencing of, so if you go to, sorry, if you go to Document Manager, you can click on Documents. Let's go to our lead sheet and working papers. We want to go to Current Liabilities, folder 630 Trade Payables, and open the lead sheet 630, which is the Trade Payables lead sheet. You can double click to open the lead sheet, and it should open within your Caseware working paper. Remember, this is a case, an automatic document. It opens in Caseware. Please locate, if you scroll through your lead sheet, find the accrued expenses account. That's the account number 91000000. Make sure that you have located this. Now, what we want to do is reference this line item back to our working paper. So to do that, what you can do is right-click over accrued expenses, for instance. Then we can select the new document reference. This is going to open your document manager window. And let's locate current liabilities, trade and other receivables. Let's take for now as an example our work program, trade and other payables, and press on OK. That's the document reference. If we click on it, it will launch the audit procedures. We've got a bunch of annotation capabilities. If you right-click over any line item in the middle or the top part of the right-clicking menu, you've got the annotation capabilities, allowing you to perform different annotations at one go. Or alternatively, you can choose to add a note, a tick mark, a document reference, a manual reference, a hyperlink reference. We've got different tick marks available. So the tick marks in your Audit International will be already created. So the tick marks are a way for us to show someone what we have done instead of writing a full note. Okay, I have agreed this line item to an invoice. The tick mark will just let the manager know, okay, cool, Sandrine has done the agree to invoice number. Now, we understand at Caseware that every firm has its own set of tick marks, which they usually use. And so it might be different to what is shown currently on this particular slide. Now, you can, if you want, create your own tick marks by going to Engagement tab on Caseware Working Paper ribbon, and then select tick marks to set up your tick marks. If you want the tick marks to appear in a particular color, then you can use the color that you want. Tick marks in Caseware Working Paper are usually green, but again, you can create your own tick marks. You can also insert the tick mark on Excel using Caseware Connector, then insert those tick marks as well onto your Excel working paper. And when I say Excel working paper, if you have a look at the next slide, these are the different tick marks that you can add. Here I've just taken an example, assuming that the tick mark is different within your firm. This is how you can also use the tick mark. Our recommendation, you can either add the legend on the Excel itself, or what you can do is on the tick mark options in Caseware, create those, add those legend nicely within your Caseware working paper and replicate it on the Excel. Now we're coming to the explanation of what the different assertions are and all the assertions within your Audit International template. Now remember, the way that you need to interpret those assertions is as the complete list of assertions per your ISA requirements. If you are from a network firm, the assertions might be, the concept will be the same, obviously, but the list might be longer or different because you've got a modified template, or firm authored template. So the assertions are usually used to consider the different types of misstatements which could occur. So these are the assertions, again, as used in Audit International. Please, I reiterate, interpret these as the full assertions as per ISA. Let's start with the C, which is the completeness assertion. Please also note, if you forgot about this video or this session, on your FSA, you can hover your cursor on the assertions abbreviation, and then you'll get the full name of the assertion. Completeness would be everything that should be recorded has been recorded. There is no unrecorded assets, liabilities, equity interest, transactions, or events. Existence assertion, which is the E, are transactions and events that have been recorded, that have occurred during the period under review, and such transactions and events pertain to the entity, and the assets, liabilities, and equity interests exist at period end. The accuracy of valuation, so this is the AV. For classes of transactions, the combined assertions include accuracy and classification. Amounts and all the data relating to the recorded transactions and events have been recorded appropriately and in proper accounts. So when you are raising a risk for AV, these are the different considerations that you have taken into account. For account balancers, the combined assertion includes accuracy, valuation, allocation, and classification. That is, your assets, liabilities, and equity interests have been included in the financial statements at the appropriate amounts. Any resulting valuation or allocation adjustment are appropriately recorded, and it has been recorded in the proper accounts. Last, the presentation assertion, the P&D, the transactions, events, or assets, liabilities, and equity interests are appropriately aggregated or disaggregated and clearly described. The disclosures related to transactions, events, assets, liabilities, and equity interests are complete, appropriately measured, and described in the context of requirements of the applicable financial reporting framework. There are no missing or incomplete financial statement disclosures in the context of the requirements of the applicable financial reporting framework. Guys, this is overview of the description of the different assertions that have been included in your Audit International. Now, before I come again to the different questions, I would like us to complete the different items, and then I promise I'll come back to your different questions around materiality. Where do we get the financial statements? We've seen that earlier. It all comes from an action taken, a source document was received, the client has processed into the subledgers and journals, which then pulls into the GL or general ledger, which is then summarized in a trial balance, which then pulls to the financial statement. We've also seen that the financial statement information can pull from other sources than your trial balance. We've seen all of that this morning. Now, the direction of the testing, if we're talking about completeness testing, you want to make sure that the information is complete. You will then take through from the source document, then you'll check it back to the financial statements. That's the direction of completeness testing. That's what I've just explained to you. The existence occurrence testing will be to take from your financial statements, whatever has been disclosed, then you track it back down to the source. You do the other way around in this particular schedule that you see on your screen. Some documentation requirements. So this is an extract from your ISA 230, section 9. In documenting the nature, timing, and extent of audit procedures performed, the auditor shall record the identifying characteristics of specific terms or matters tested, who performed the audit work, the date such work was completed, that's your different sign-offs, who reviewed the audit work performed, the date and even of such review. So for example, the invoice number that you have checked to that, let's say, that line item onto your lead sheet. Another experienced auditor should be able to do the same thing as you've done and come to the same conclusion. And that's very, very important. I think the documentation requirement is crucial, and Caseware Working Paper does offer you the platform where you can insert all your supporting documents necessary for somebody to review your work performed. Now, an extract from ISA 500, section 9, when using information produced by the entity, the auditor shall evaluate whether the information is sufficiently reliable for the auditor's purpose, including, as necessary in the circumstances, obtaining audit evidence about the accuracy and completeness of the information, and evaluating whether the information is sufficiently precise and detailed for the auditor's purpose. So information produced by the entity, by your client, will be the audit evidence. And it's all about the accuracy and completeness of the information. It should be sufficiently precise and detailed for you to give, to comply to that extract of ISA 500. So how do you call that? I'm reading questions at the same time. The document that you obtain from your client should be detailed enough and precise sufficiently to meet that requirement. I'd like to go also through the audit program conclusion. I think it's time for us to really ensure that we are confident on who should be taking the responsibility of the work done. So it's everyone. Whether you are a first year, a manager in that room, or the partner in the room, each team member will take the responsibility of the different sections, of the different line items listed in the work program. That is why each procedure in a work program has the sign-off capability. I've signed off, I've done my audit procedure to address risk for completeness assertion. I've done the sign-off. So Sandrine is taking responsibility that she has done enough work to address risk at this assertion level. Now, at the end of the work program, you also, in each work program, you've got the audit plan conclusion, completion, where you and your managers can fill it together. Somebody's going to sign it off, where first of all, an appropriate level of skepticism was used in evaluating your audit evidence obtained. Please note it is a mandatory procedure. There's a red star next to it, meaning that you must conclude on that. You've done the evaluation whether any management's judgment or decisions, either individually or as a whole, are indicators of possible management bias. misstatements identified other than those trivial. Remember, we've discussed about what to do for those who are deemed trivial. Misstatements have been recorded in your journals of overs and unders. It's the document 335. Any new risk factors identified were documented, assessed, and addressed through the performance of procedures above. So the message here, when you sign off for a procedure, you take the responsibility of the section in the program. You take the responsibility of appropriate professional judgment applied. Now, I'm going to go through the different sections, questions that we have received since we've gone through after the break, sorry. So let's go through the first section. The first question. So we've got a question from, the first question that I have pending is from Yusuf, to demonstrate how to compute materiality, the prelim, the final materiality, and explain the major difference between the two, 100%. So Yusuf, the first thing I have to mention, the preliminary materiality is part of your planning, right? When you start your engagement, you go through the planning section. Then we go through the digital dashboard to show you that workflow. This workflow here really helps you understand where you're standing. So at the planning stage of your audit, you've decided under client acceptance or continuance whether you will go ahead, or your managers and a partner have signed off whether we can go ahead with an engagement. What is the overall risk or the risk for this particular engagement? Okay. Then they will, with your assistance, go through all the different documents and procedures that are found under the planning section. Then the manager, what they'll do as well, in the materiality document 420, we're still at planning stage. We're still planning our engagement. What are the work that we should do? At the planning stage, the manager will then decide on the materiality. Now, how to compute the materiality on the 420 document, I will not go through the details of it because this is usually done at a more, not an intake level, but more higher than an intake level. So the manager will then, based on your first methodology, compute the possible materiality at planning stage. Remember, we're still at planning stage. Compute it at planning stage based on either of these items on materiality document. Confirm, provide his comments. So in this case, our methodology says our over materiality is calculated at 2% of gross revenues. That's what we have here. That's what's pooling here. And the manager has also provided us guidance. It's a lower risk assessed engagement. Performance is calculated at 75% of overall materiality. And trivial materiality is set at $66,000. Now we are at planning stage. What will happen at planning stage? You will then go to the FSA, refresh the FSA, or the manager will do that. You will then go through, I'm looking for cash and cash equivalent. You will then go through your materiality assessment, go through your Scottabees for the risks reference, decide on your RMM. If it is a material FSA, we're still at planning stage, remember. If it is a material FSA, you've identified a risk for the assertion, the RMM is greater than significant, you must select a procedure to perform. If there is no risk for an assertion, the risk, the RMM is significant, there is no procedure selected, then you go through your audit plan procedures under your work program. Now, once you've gone through the work program, I will not explain the full bit of work program. You've moved to responding to risks that you have detected at planning stage, because we've gone through a bit of work here. We are moving to responding to risk through our procedures. We're doing a procedure to address the risk that we've identified. Or if we didn't identify a risk based on the methodology, we're doing a procedure because the FSA is material and we're assuming for whatever assertion there could be a risk, so we're doing the procedure. That's responding. Then upon completion, all the risks identified, all the unders and overs will then be assessed. That you will do the assessment on, again, the FSA. And then you will finalize your materiality once again. Once you've done all of the work, you need to go back on 420 document and then finalize on your materiality amount. You're telling the software, are we telling that we are keeping the materiality at 2.2 million? That is, whatever we've done at the planning so far is we're confirming that materiality is 2.2, or is materiality the at final stage the materiality is deviating, should have been lower because you've seen based on the figures and on the tests some risks, misstatements, and so on. And this is going to go into too much discussion, but if you have a materiality lower at final stage, that's a very big implication. So you need to review everything. So the difference between the two is on the stage that you are on. Sorry. So yeah, so Yusuf, that's what I have to answer to that question. The difference between the two, the major, is on the stage you're on. At final stage, also on your materiality 420 document, you've got the section G, which talks you through revisions to materiality. So these are all the applicable ISA that at final stage you have to confirm revised materiality. Whether there are conditions that support these revisions. I'm going to move now to the next question. So there's another question from Tariro around the audit completion section. What documentation will be expected to reference to professional skepticism, for example? So Tariro, for that one, please, I'm going to keep your question and answer that question in a different session or by email, because we don't cover that one in today's section. It's really the overview, but definitely will give you more information around the completion section. And again, the completion section will be done by your managers and your partners with also your assistants. Not sure which at which level you're currently in your firm, but definitely I'll come back to you on that one. So Daniel, I see that you've left the session. I think we might then answer your question later on if you've got the team online. From Caseware Africa, you were a probe user, now you want to migrate to Audit International. How do you copy components of your financial statements in TB? So Daniel, for that question, we've got some best practices. We recommend that you create in the proper manner, your Audit International engagement, you synchronize with your IFRS template, and then we can show you how you can re-import the TB in that in that particular, in Audit International. There's no button that will allow you to migrate because it's two different concepts, two different templates, two different compliance. Another question from Joseph: how can we edit the default percentages on performance materiality dropdown? That's a very nice question, Joseph. So in the default template, you'll have high risk computing 65% of overall, moderate 70%, low risk 75% of overall materiality. That's the methodology in Audit International. Now, using the out-of-the-box template, you can simply, on a calculator, modify the calculation. Let's say my low risk is at 80%. Then I could take 80% times 2,200,000 and change, it's in a green background, update that automatic calculation and just add it here, computed at 80% based on SP methodology. Just add a comment. Alternatively, we also have the firm authoring option. If you want to insert your firm's methodology in the template, then we can also assist you in doing that. You can then change in the audit options the different computations. You decide as a firm, you want to take control of the technology, you want to insert your methodology, then we can help you in doing that. We've got expert consultants here in terms of helping you modify the template. It's a journey that we take with you, so we'll gladly connect with you on that. But for the intermediate, if you want to use Audit International right now, that's the goal. Please do it manually, but we'll definitely connect with you and explain to you how this is done in the back end, how you can change these. Like I understand, Joseph, that your current percentages are higher compared to our approach. Yes, please do override at the moment. Ask your team to add the right comments at this time, at this point in time, and then ultimately you can also automate this by going into the template authoring. Like you take control. Sorry. We've got another question from Wayola. So you use revenue as the basis for materiality, and in the due course of the audit, you post a journal in your revenue ledger, 100%. Do I have to recognize the change materiality as my final? Wayola, that conversation is tricky. First of all, when you are processing your journal entry, when you're processing your different journal entry, you will see, let's take the example of cash and cash equivalent. In the file that I've shared with you, we have processed an unrecorded journal entry at 159,000. So you can assess the impact. So if it is recorded, based on your question, you've paused the journal entry. I'm going to assume that it's a misstatement recorded, that it has recorded. So your final balance will then change here. You'll see the impact here. And you can assess whether you should, based on your professional judgment, again, whether you should change materiality. The change in materiality is, as mentioned before, regulated by your ISA 320, 320, 13, 14, and 45010. So the timing, the extent, the nature of whether you need further audit procedures to be performed need to be taken into consideration. So whether you should change your materiality based on your question, I can't answer a yes or a no based on this. There's several considerations to consider. But definitely you should see the impact on the FSA user professional judgment to go forward. In your case, Viola, what I can also interpret is if your revenue was not selected as material initially at planning stage, as you go through your audit workflow, you've got a material balance at final. The technology is going to select the materiality for you automatically. Then what you need to decide is on the if you have identified risk or not for your different relevant assertions now that your revenue is material, and then on your risk calculation. If it's all insignificant, then if all you did not identify any risk, it's all insignificant for our RMM, then select which one procedure that you need to address, or which one assertions that you need to address. Right, I can't see any more question on my side. We don't have any more questions. Thank you for all of those participating. We have the survey in the chat box. Please do fill in the survey. We really look forward for your feedback after today's session. It's really important for us to make sure that we serve you better in the future. The program for next week. So next week, we are going through Caseware Cloud. For those who have Caseware Cloud and SmartSync, I'll share with you some recommended best practices, how to make the most of your Caseware Cloud. On the 15th of February, we've got the audit report and the review management. We'll go into the details of that for financial statements. On the 16th of February, we're going to go through a case study of stock count attendance and help all of you with that particular section of your audit workflow. Guys, please do connect with us on our company LinkedIn page, Caseware Africa. Also connect with us on our Get Ahead Audit Intake 2024 LinkedIn page. We've got next week surprise gifts. You must first of all go and log in onto LinkedIn to Get Ahead Audit Intake. If you're in this page, then you'll be eligible to receive the gifts. The recordings will be available next week. For all of you requesting recording for this week, please bear with us. We're busy trimming and doing all the necessary to give you the recordings next week. We also have our YouTube page. This is a fantastic page. You know, you've got all the very nice videos. If you're thinking of watching something, you know, bedtime, please go ahead, log in to our YouTube. We also have a Facebook page, a Twitter page. Looking forward to connect with you all. Thank you all for your attention. Thank you all for your participation. You will get your recorded video in the next week to come. And please do connect with us on our Get Ahead page to be eligible for gifts next week. I'm so excited to end the session with you all. Please do take care and see you next week.